Hey everyone, today Jody and I are going to be talking about our outlook on the market and what we believe this quarter may look like for investing. First, I'm going to walk you through a document our investment team uses to break down the different variables in the market, and then Jody's going to go ahead and walk you through what the team meeting was and everything that was discussed in that. So when we meet as an investment team, this is the sheet we use for determining the market sentiment. Based on the risk assessment topics, we can determine where we fall on this heat scale. We go over recession indicators, market strength, earnings, growth, wages, the Fed. As you can see, we have risk on, neutral, and risk off. Depending on what we indicate in the topics below, this heat scale tells us which environment we are in. Risk on means we are willing to take on market risk and invest full steam ahead. Risk off means we will hold on to cash a bit more than usual until the sentiment improves. Neutral is where we tend to have stronger uncertainty in either direction. Once our team establishes which environment we are in, we can scroll down to where it says risk scores. This section helps us and each of you figure out which model will be the best fit. For example, if you normally sit at a 65 risk score, we are in a risk-on environment, you will be placed in a moderate model. But let's say the environment is risk-off, then you would subtract 20 risk points and essentially be at a 45. Now this will depend on each client and each environment we are in, but this gives you an idea of our process. Now Jody's going to talk about the investment team meeting, everything that was discussed, and what environment we're currently sitting in.
Hey everybody, we just wanted to provide you a quick update of our investment team meeting last Friday. The first things that we're always going to look at is, do we think there's a recession coming? And in this case, we don't feel like there's any way we're going to escape a recession. So the things that go with that are earnings growth are going to fall, and that's something we expect to see over the coming quarter. Wages are going to go down, and then another negative item on our list was third-party indicators. So that really pushed our risk score to risk off, and from risk neutral in the first quarter. The only thing that we saw as a positive was Fed policy, and that may be more of a short-term positive than a long-term positive, but it's enough money is coming into markets with Fed easing to provide some stability to markets in this environment. Some of our discussion involved, what happens typically in bear market pullbacks in a recession. And typically there's three different phases. There's the initial phase, which is kind of what I would call the panic phase, where everybody is trying to figure out what's going on. In this case, we knew the coronavirus was going to cause a lot of trouble for markets, but really there was just no look through. And so there was a lot of selling early on. In phase two is really typically a relief rally, where the market tries to find a bottom and comes back up for a little while, but it really just doesn't have enough steam. And then phase three is another, and typically one of the worst downturns in the market. So what we think we've seen so far is we think we've seen that panic sell. We think we're in the middle of the relief rally. And we don't think that relief rally is going to last very long before we get the last leg down on this market. Everything seems to be very condensed right now as the world is trying to figure out what is going on with this virus. The next phase for us, as we try to figure out where this market bottoms and what do we do in your portfolios, is to really watch moving averages. We're watching the technicals of the market a lot. And we're also trying to not be too early. We think in a bear market, it just typically lasts longer than people think. And a lot of times that relief rally that we've discussed, when people buy back into that rally, they experience a lot of pain afterwards. And so we've been very conservative in your portfolios. We're going to be conservative getting back in, but we also are finding opportunities. And so we're going to be looking for sectors that we can add to, or positions that we can add to that are beneficial for you. And that'll be on a client by client, portfolio by portfolio basis. But we are going to find opportunities, but we're just going to be very patient.